Sandeep, hi, morning. The TCS buyback earnings tomorrow. What's the take here?
Hey, Aja, the buyback, so there are two ways buybacks are done. One is that if the stock price is down substantially and the companies want to indicate that they are positive about their future outlook and they do a buyback. The second buyback is to give money back to the promoters in a more tax efficient way. So I think this falls in the second category because the IT industry overall is going through a tough time. This is just paying out money instead of dividend. They are paying it out via the stock buyback. If you remember, the last stock buyback was for at 4,500 rupees. Subsequently, the stock dipped below 3,000. So I don't think people should get too excited about this buyback.
Kunal, are the charts reading the same? That, while TCS may have covered ground at its 52-week high, it may not have, priced in all the bad news.
Well, I would look at it this way, Aisha, that the major bottom for many of these IT majors happened in September, October 2022. And I think even the month of January, February, when these stocks, delivered some negative surprises on results, TCS, Infosys particularly, these stocks did not come back to retest the previous September lows. And now at a point that these stocks have come back towards a 52-week high. So the prices are, quite strong. The approach over the last 1 year, 13 months for stocks like TCS and Infosys is quite different than what we would probably have expected in case if there is heightened amount of volatility. Now, if there is any negative surprise, of course, the prices would get into a mild correction, but I would believe that that could actually be a good buying opportunity for stocks like TCS and Infi.
Sandeep, what's the take on MCX as it gets the approval to shift to a new platform? Quite a bit of run-up has already taken place in the stock, though.
Yeah, directionally, the outlook looks because the cost savings they'll do should be quite substantial. But like you rightly said, that the run-up also has been substantial, and overall, the commodity outlook, because when commodity prices remain subdued, as is a greater possibility, the trading volumes in commodities also remain subdued. So I would say on balance, a lot of things are already priced in.
Right. Okay, couple of other names which are going to be in focus. We've been talking about as to how the crude surge is likely to impact ONGC, OMCs. There's a quarterly update coming in from Titan as well, wherein the Q2 jewelry business has seen an uptick of 19%. The eye care business as well has seen an uptick of 12% on a year-on-year basis. And then how can we not talk about Reliance after the RDI investment into Reliance Retail, equating to 0.5% stake that got announced. Sandeep, you think what's happening with Reliance Retail could be something we saw at, back in 2020 when Jio had these massive spree of investments?
Yes, I think Reliance Retail has been attractive. So I think a lot of Reliance ventures tend to attract private equity and strategic investor money. But then from the public investor standpoint, I think it's more to do with how much cash flows they can generate. And they've been continuously entering new areas which are more and more cash guzzling. And that explains the reason why the stock has been so subdued despite them venturing into several new areas. So I would think that there's nothing great per se in Reliance. So I think when the overall market picks up, FII flows pick up, Reliance will also start doing better. But there's no case for it to be a significant outperformer.
Kunal, I bet the charts as well read the same. No trigger for Reliance, and I guess the stock as well has been in consolidation. In fact, as well last week, right?
Yeah, I think it's now become more of an event stock because I remember I think in the month of I think July, August somewhere when the stock had this new news flow for Geo Financial Services demerger, it moved up quite smartly. I think 10-15% kind of an upward move for Reliance Industries. Post that, we've actually seen the stock getting into an initial leg of range and then a recent correction, which the stock has come back to the 2,300 odd mark, which was I think the starting point for the stock price rally in the month of July. So I think it's now become a stock which would probably get into any kind of a major uptrend into an even flow. But on the other hand, we also look at the major support points for Reliance Industries on the stock prices over the long term. So there have been two important or rather major support zones for the stock price around 2,100. This was in 2023 in the month of January, February when the stock bottomed out, and even in 2021 end when the stock bottomed out at that 2150 mark. So maybe another 50 points, 70 points dip on the stock price, it could actually be a good risk reward to start looking at the stock from a longer term perspective.
Okay. Vishali, let's get some mid-cap ideas from you in terms of where you think that a 15-20% move in next 3 months, the next 2-3 months cannot be ruled out.
Well, so to start with, I'm looking at MMTC. Have a look at MMTC. The stock has already given us good returns because we have been tracking this stock right from 40 levels. And right now, it is already in an uptrend and we are seeing some consolidation happening. So I would say that, yes, this still becomes a good buy because from here on also, a trading target, of course, comes to 68, 69. But even with a long-term perspective, I would look at a target of 100, 110. The other stock which I still like is RailTel. That has also been one of my recommendations today. Overall, rail stocks have been doing very well. And I still feel that at least 10-15% return from here on in RailTel cannot be ruled out. I am seeing the weekly chart and the daily chart also. Today also, if we see, it has consolidated and on Friday we saw there was a good volume pickup coming in. So I think it makes a good buy at these levels. To start with, I would look at a target of 230 to 40 and then from there on we would have a relook for further higher targets. So these two stocks are definitely on my radar right now.
Okay. All right, Vishali, really appreciate your time. Thank you for joining us. I just want to mark markets right now in terms of SGX, Asia, oil, crude, Dow futures. Now, there is no scary adjustment in the financial market. It's unfortunate what's happened in Israel, but Hong Kong is up. Japan is just a minor nick here or there. SGX down 60 points or GIFT Nifty is down 60 points. The implied opening is going to be 60 points lower, which is not very scary, so to speak. And if you check on crude also, it's not crude is up 10-15%. Crude was up 5-6% and now it's up in a reasonable range. It's not even gone past its recent highs right now. So Sandip, from a market standpoint, every time when there is a geopolitical concern, markets, they get worried. What will happen to crude? What will happen to risk? What will happen to volatility? This event is unfortunate, sad, tragic, but true. But purely from a market financial standpoint, can we just move on and ignore it?
So Nikunj, I think it will be too premature to say that. So I think we need to see the developments as they unfold. At this stage, the greater probability is that it will remain a localized event of sorts and it will not get expanded into the wider Gulf area and with involvement of other countries. But I think the next 1 week will be crucial. So we need to watch out for the developments. Per se, broadly on what has happened and how the other market reactions are. So I think Indian markets are relatively insulated in the sense that because of less exposure, etc., to Israel, except for defense cooperation, some pharma operations, etc. So we are not so directly affected unless and until crude runs up sharply, where the up move has been just 3.5%. Many of the Asian markets are shut today, so there's no real queue coming from the Asian market. So I think the 60-point downtick is par for course, and if the markets, even if they fall 100-150%, I think it would be a reasonably good reaction.
Okay, Sandip, just stay with us. Lots more to talk about. We've got some exclusive info coming in, and we learned from our sources that Escorts is actually looking to exit its railway business. In fact, Somit is here with all that he's picking up from his sources. Somit?
So what we're understanding from our sources is the fact that Escorts is looking to completely exit its railway equipment business. Now, the evaluation that the company is looking out for this divestment is close to 4,000 crore rupees, which is nearly 14 to 15% of its total market capitalization at this moment. Now, the reason behind this stake sale for Escorts is the fact that the railway business has been a non-core business of the company, and they're looking to grow more their tractor business going forward. So even the funds that the company would receive from the stake sale would be used for the capital expenditure or for expansion purpose of the tractor business going forward. Now, this railway equipment business contributes only 9% to the revenue of the company and around 10 odd percent to its EBIT. And off late, the railway business has been doing good because of higher export orders coming in. And in Q1 also, they had won an order related to electric panel business, and their order book for the railway business stands at close to 950 odd crore rupees. And over FY18 to FY23, the revenue and EBIT of the railway business has grown 3x. Now, we also reached out to Escorts, and they denied to comment on this market speculation. But what we are picking up is that they are eyeing for a valuation of close to 4,000 crore rupees from the stake sale, which would be nearly 14 to 15% of the market capitalization, and they will be completely exiting the railway equipment business, that is Escorts.
Thanks very much, Somit, for highlighting all of those exclusive details. In fact, Sandeep, wanted to get in your thoughts. Eyeing a valuation of about 5,000 crore rupees, looking to exit this railway business. Your views?
I didn't even know Escorts is a railway business. I don't know really what's going to happen on this.
Fair enough. But this aside, how are you reading into the prospects of the new launches that we've witnessed? The fact that a lot of these auto majors as well will be banking on the festive season sales. They have acknowledged the fact that that premiumization trend as well has been seen across the board. What is your view on how auto is shaping up?
See, auto overall is well placed in my view because of the fact that demand was subdued for some time. Now it's coming up, and the late rains and the cropping patterns, along with the farm produce prices, indicate that there should be some revival in the rural sector also. And interest rates remain intense. So I think on the financing side, the financing will be available at the same rates, more or less slightly higher than what it was in the last festival season. And input prices have been subdued, and like you rightly said, premiumization is happening. So even with small volume growth, the value growth for many of the companies is much greater. So, and valuations in the overall auto space are reasonable. So I think I'm positive on M&M, I'm positive on Maruti, and I think on the two-wheeler side also, although we don't own any of the stocks, Bajaj Auto seems to be on a good run.
That it sure does seem to be. In fact, so far this year, we've already seen an uptick of about 38% coming in Bajaj Auto. And mind you, the chunk of the gains have only happened in the last 2 odd months or so. But Sandeep, if, this situation in Israel does get escalated, I mean, too early to say, to call it that. And if we do see a bit of a step back from equity markets, would you be a buyer into that weakness?
Yeah, at this stage, there is nothing negative per se about the Indian economy or the Indian markets. If at all, if you see the data which has been coming out, both in terms of inflation, in terms of growth, like the core industry data which came out just few days back, and it's follow through to what could happen to the IIP data, etc. I think things are looking fine for the Indian market. Some premium over historical valuations is just okay. So I think if there is a reasonable sell-off, it's only going to be a buying opportunity.
Okay, fair enough. Meantime, what's your outlook then on how things are shaping up within the entire pharma space? Just going by the kind of valuations, the kind of domestic market growth that we've seen, Sandeep, being very selective when it comes to pharma?
Yeah, I'm always very selective. So although some of the smaller pharma companies have done well, many of the smaller pharma companies don't have cash flows to support their valuation. So I just try to stick to the larger ones. So we have Sun Pharma as our core holding, Lupin as a contrarian bet, which we took year and a half back. That's doing well. So I think these are the two holdings we have. But overall, pharma is still a reasonably under-owned space. So if the performances keep on improving, we could see the stocks do better.
Okay, today you may want to look out for, what Sun Pharma does, because remember they own 72% stake in Israel's Taro Pharma. So maybe just a sentimental knee-jerk reaction that could come by over there. The first rates then on your screen, and the Nifty definitely looks a lot more believable. The Sensex rate will adjust for itself. Let's see what TCS is up to. The board is also going to be considering a buyback on the sidelines of their earnings. Sun Pharma, of course, has started off lower by about almost 1%. TCS, not bad there. Almost a 2% bump up on that particular stock price. Titan, MCX, these are the other two that you may want to look out for. MCX, after them getting the SEBI panel approval to shift to a new platform, 8.5% gap up, and this on a stock which has already seen a very, very steep run up in the last 2 odd months, or I think month or so. Titan is the other one which should just come up for you on your screens. That has come out with a very robust and very bullish second quarterly update, both for the eyewear as well as the jewelry segment. The growth has been exceeded what the market was anticipating. About a 0.5% uptick is what you're seeing on Titan as we speak right now. And then, of course, Reliance. Let's see whether that's seeing any material impact after Adia's investment of 0.5% into Reliance Retail. And if that is seeing any move, absolutely unchanged. I think the first rates are yet to trickle in there. There's also Tata Steel. The India business delivery is down about almost 2%, and Europe delivery has also slipped about 4%. So that's another stock which you may want to keep on your radars this morning. Prestige continues to post a very good pre-sales figure for the second quarter. It's an uptick of 102%, no less, and collections have come in higher by about 1%. And Sandip, this is almost a consecutive trend that you're seeing, right? Real estate companies, all of their quarterly updates, the collections have been fabulous, and the pre-sales figures have seen a massive, massive uptick.
That's true, and it's been a bit surprising also how the real estate sales have held up, especially for many of the Bangalore, etc., south-focused companies where technology sector employees form a big part of their overall customer basket, and we've seen that hiring pattern in technology have been quite muted. Even the salary hikes have been muted. But overall, growth trends continue. I think the real estate sector has been coming out over the last 3 years out of, I think, 12, 13 years of depressed sales. So it could continue for some more time.
Now let's get in a take on the charts then. Some of the stocks that had it a bit rough last week. India Bulls Housing, for instance, shaved off about 7% plus. There was Glenmark Pharma as well, which declined, and something like an Indus Stars was down about 5.5% or so. Are the chart readings indicating that it could be a little bit more weakness?
So I think for India Bulls Housing, yes, the stock could probably get into some bit of more weakness at 175 odd levels, where the stock closed on Friday. The stock has come back towards the previous swing lows, but then the price patterns and the volume still indicate that there may be another round of selling which could come back into the stock price. So not too much bullish on the stock price over the very near term prospects. Yes, the recovery has been quite stellar for the stock from those 110 odd levels till I think 200, 205, which was the approximate high for India Bulls Housing. But I think the recent correction could probably have more legs on the downside. Out of the other names which you mentioned, I think Glenmark is also something which looks very attractive. In fact, that's a stock which has done exceptionally well from the mid-cap end or the tier 2 large cap names from the pharma pack. So I think in case if the stock corrects, Glenmark Pharma and say comes back towards 740, 750 mark, that could be a very good level to buy.
Okay, 0.5% lower. That's where the Nifty is settling in at in the pre-open rates, and that's a cut of about 87 odd points coming in there, but holding around that 19,550 thereabout level. Sandeep, just wanted to get your thoughts in. I mean, all the newspapers have already reported it that the Godrej group is now going to be headed towards the split. The two cases in point, of course, GCPL, Godrej Industries, and Godrej Properties. What's the take here?
So how it helps actually the companies improve their performances, I'm not very sure, although we've seen a huge uptick in Godrej Industries stock price. So I think that's something we need to watch out for. Per se, fundamentally, if something changes, I'm not really aware of that.
Well, reports are indicating that the Godrej Group is heading to split that 1.76 lakh crore conglomerate, and the Family Council, it seems, is discussing the division terms as well. And some announcement to that extent could happen very, very soon. But anyway, let's get in some mid-cap strategies on that note. Kunal, what's it looking like for the mid-caps today?
So I think MRP is something which looks attractive on the charts. The stock has been trading with a decent degree of uptrend from the previous lows in the month of June, July of 65. The stock has upped its base closer to 1992 levels. So would suggest a buy with a stop loss at 92, targets of 106.
All right, there you have it. Those are some top trading strategies coming in. In the meantime, let's also get in a view from you, Sandip, on real estate. For instance, you have a lot of these companies that are looking at hitting their pre-sales goals, and that, of course, will have a ripple effect on the entire industry as a whole. So what about your take on infrastructure, names like an NCC, NBCC, etc.? How are you looking at some of these stocks shaping up?
Yeah, so many of these stocks have small part of businesses coming from real estate, but I think if the real estate momentum continues, then stocks from sanitary ware, tiles, etc., all the or companies from the wire segment, fans, also. So the momentum continues at the second leg into those sectors. If the real estate sector does well on the pre-sales side, a year later the demand comes back for these sectors. Overall, I think that's also positive for economic growth as a whole, because real estate sector tends to be significant employment generator, and that has positive multiplier impact on the entire economy.
Okay, there you have it. That's the view coming in from Sandip on Infra. But let's get a